Hi everyone, welcome back to Ask My Accountant, where we tackle common financial questions faced by business owners. I'm Laura, a finance manager at Sleek, an all-in-one digital platform to help you manage your business operations. In today's episode, we continue the journey of understanding your financial statements and focus on the simple but sometimes tricky balance sheet. Are you ready? Let's get started. Okay, so the balance sheet, what is it and what does it look like? Let's start with a really simple balance sheet prepared as at 31 December 2020. The balance sheet provides a summary of assets, everything that's owned by a business, liabilities, everything that's owed by a business, and the equity that shareholders own in the business. Unlike the statement of profit and loss, which covers income and expenses over the year, the balance sheet is a summary of financial position at a point in time. So, why do you need to love it? In addition to helping you understand the net worth of your company, the most important thing it will tell you is how well you're able to pay back what you owe. As soon as there's any sign that your assets might be too low to cover your liabilities, you need to spring into action to bring your business back in health or risk going out of business. To help bring these concepts of assets, liabilities, and equity to life, I'll introduce you to Jane and use her personal assets and liabilities to help you out. Here's a list of some common key assets. So obviously cash, Jane's apartment, her laptop, her car, any shares she invests in. Jane's liabilities are anything she knows she will have to pay using her cash. For example, her home loan. Finally, we can understand Jane's equity using the information we have about her assets and her liabilities. Jane's total assets happen to be valued at $600,000 and her liabilities are $400,000. The definition of equity is the cash you'd have left over if all the assets were sold and all liabilities were settled. So, assuming she did this, Jane would have $200,000 left over, and that's her equity. Let's take a look at a typical business balance sheet. Before we start, you'll see that assets and liabilities in this balance sheet are split out into current and non-current. Current is any cash expected to be received or paid within a year, while non-current is anything that will be settled later than that. Now, let's dive into assets. So cash, what is it? Usually this represents the business's bank balance. So what do you need to understand? Cash is king. It is the oxygen of your business. Your balance sheet tells you the story of whether you have enough cash to comfortably pay your debts, help you survive through a tough time, and invest in growing the business. Accounts receivable, what is it? This balance will most likely be the payments due from your customers. For example, when you've given them 30 days to pay an invoice you sent them when you ship your product out. Next, inventory. So what is it? Inventory is the physical goods and products that are sold by a business to earn income. For example, the shoes that a shoe retailer purchases to sell to their customers. Fixed assets. What are they? These are the assets that your business uses in order to generate its income. For example, the machine used to produce the products that a business sells. Over time, the value of these assets in the balance sheet decreases to reflect that they get tarnished and broken. In accounting, this process to reduce the value of assets over time is called depreciation. We'll cover that in another video. So what do you need to understand? Investment in assets that improve a business's ability to generate income, sustain operations, and grow is key to a sustainable business. So, long-term deposits and investments. What are they? This is cash that you decide to invest for longer than a year in the expectation that you'll receive a higher return on it than if it were just sitting within your business. An example would be the high interest rate on a government bond. Okay, now we'll go through liabilities. So let's start with accounts payable. What is it? This is usually cash that you owe your suppliers if they've provided a service or shipped goods to you, but you haven't paid them yet. So, what do you need to understand? Just like it's important to collect your cash as quickly as possible from your customers, it's also important not to pay your suppliers too soon. The key to optimizing the timing of receiving and paying cash is to maintain an organized billing and payments process. So next is loans. What is it? This might refer to a business loan or cash that the bank has lent you in order to kickstart your business or grow. In your non-current liabilities, you have the portion of the loan that's due back to the lender after 1 year. And now we're at the final component of the balance sheet, equity. So what is it? As I mentioned earlier, the definition of equity is the cash that would be left over in the business and available to shareholders if all assets were sold and all liabilities were paid. That cash that's left over in the business had to come from somewhere, right? Yes, there are two main sources of this cash, which together make up the equity balance. One, retained earnings. This is the cash generated or used by business operations, that is, the profit or loss, less any dividends that have been made to shareholders. Second, shareholders' equity, which is any cash injected into the business by shareholders. And there we have it. Hopefully the balance sheet is a lot clearer to you now. Before we end, I'd like to emphasize the key reasons the balance sheet is an important business tool that you need to love. 1, it tells you about your business's financial health and when you might be in trouble by showing you how easily you're able to pay back what you owe. 2, it tells you how much your business is worth. 3, it's a handy list of everything you own and owe, allowing you to easily see your cash balance or when your customers owe you money, for example. Congratulations, you're now an expert at reading the balance sheet for your business. If you liked this episode, subscribe, give this video a thumbs up, and don't forget to leave any questions down in the comment section below. If you need additional help, don't hesitate to reach out to us at Sleek. Our friendly team of accountants and experts are here to help you manage your business. Here's Laura checking out, and see you in our next video. Bye.